JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 8th of April 2021. So yeah, welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, just before we jump into the charts, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is the German index, DAX, and look at this beautiful activity today for the bears, of course. And let me just zoom in here just a little bit. And yep, you can see that the index kind of is flirting with yesterday's low. Initially, it did drop below it, but the bulls were quick enough to lift, to raise the price back above that hurdle, above the yesterday's low near the 15,100 territory. So yep, now we're keeping a close eye on it, and we want to see how this is going to end up being today, because for now, at the moment, we're kind of, let's say, stuck here a little bit. We're not really kind of, let's say, even climbing above the Monday's high. Or should I say, actually, sorry, not Monday's, Tuesday's high. Sorry, okay, let me rephrase that. So we're currently stuck above yesterday's low, but below Tuesday's low. There we go. If that's not confusing enough, I mean, hopefully not. Basically, we're stuck in this little kind of range here, and this is kind of a, I would say, a no one's game here, because again, we need this index either to drop below this 15,160 territory and stay below it in order to aim for slightly lower areas, or I would prefer to see this one climbing back above this 15,210 territory in order to maybe start looking at the upside again. But at the moment, like I said, we're nowhere here, and we're stuck in between these two levels, so that's why I'm gonna play a bit safe and just gonna leave it for now and just see how this is gonna play out. Jumping into Ftse 100, unlike DAX, Ftse is on fire, and yep, it's pushing higher nicely here, and most importantly, it managed to create a new high for this year. Now, this is not an all-time high, because as you can see here, we're now kind of approaching levels that we saw here at the end of February of last year, before this kind of strong kind of crash here that we had, that we experienced in the beginning of spring of last year. But now, basically, for now, at this point, I mean, after we've managed to get this break here, this is what I talked about previously, that if we get this break and we see the daily candle staying above the 6,802 territory, then yes, this opens the door towards the highest point of January, the highest point, well, the previous highest, the highest point of January and the previous highest point of this year, near the 6,903 and 4 territory, approximately around there. Yep, we've managed to reach that perfectly, so great news. Now, the big question here is, can we stay above this area, above this hurdle? Now, of course, don't get me wrong, it's we just managed to break this area right now. Will we see the index staying above this hurdle? Well, we'll just have to wait until the trading session today. But so far, everything's looking quite positive. If we do stay above this, then of course, yep, this creates a further opportunity for Ftse 100 to drift higher, and then next target for us could be that psychological 7,000 territory or around it. But I'll pick up on this one probably tomorrow just to see how everything's getting along here. And then we'll take it from there. But if by any chance the daily candle drops and stays below this highlighted area right here, the 6,904 zone, then maybe we could be due for a bit of a corrective move lower. And also depending on how this is gonna how the US equities are gonna trade today as well, so keep that in mind. Now the reason I mean one of the main reasons here why the Ftse 100 is rallying, unlike let's say the other indices like the DAX, which is drifting lower a little bit. I mean, managed to recover, get itself back into positive territory, but in the first kind of half of the day it was drifting heavily to the downside, or maybe I wouldn't say heavily, but just still to the downside. But the Ftse 100 was gaining here, and yep, that's the main reason for that is of course the weaker GBP. So yep, we know that these two, the GBP and the Ftse 100, tend to move in opposite directions from each other. That's understandable because most of the companies that are listed on the Ftse 100 are making their money in different currencies, so that's kind of one of the reasons. So yep, for now, long story short, basically we'll keep an eye on the 6,904 level here, and we'll see where this daily candle is going to end up being today. Dow Jones Industrial Average. So guys, now the index did drift slightly higher yesterday, but to be honest, I would even say it kind of remained flat. We've closed near the 33,446 territory. The cash index right now is slightly below it, and yep, we'll see a small little gap here to the downside. Not a significant one, but nevertheless, this index could open today a little bit lower, but of course keep your eyes on this 33,259 territory marked by the high of the 29th of March, because if the index continues to trade above this hurdle, above this area, then yep, we could see let me just remove this very quickly. We could see a nice rebound here and a push higher. Also, maybe, just maybe, this little potential pattern here that we're seeing out of these three candles, and maybe with the fourth one, we could see this being as a possible bullish flag here. But again, let's not overcomplicate our lives. If you want to be a little bit more on the safe side, well, probably wait for a push above the current all-time high near the 33,618 zone, and then go for some higher levels, because such a move here will confirm a forthcoming higher high and more buyers could join in. But if this index suddenly starts dropping here below this hurdle right here, this 33,259, then yes, we could consider a bit of a maybe decline here. However, as you can see, I'm drawing here this upside support line, which could come also into play, and in order to kind of maybe strengthen the downside scenario, a break of this or the downside scenario in the very short run, a break of this upside line would be needed. DXY, very quickly on this just to see what's happening. So yep, everything's working according to the plan. Now the plan was that I've mentioned this one yesterday, that we might see a bit of a retracement here after we getting a rebound from the 21-day EMA. We might see that retracement to the upside at maybe a test of the 92.50 territory or this downside line, and if all this area provides good resistance, yep, another slide could be possible, and this is exactly what we are seeing right now. So my next target, as I mentioned this morning, is the 92.03 territory, approximately around here, or in a way you could just look at that 92 zone and then yep, kind of take it from there, because if we get a clear break below that 92 area, my next target is the 100-day EMA here shown as the green line, and that area would be roughly around the 91.75 territory, and then like I said, we'll take it from there. Gold, of course, is enjoying the weaker dollar and pushing above this 1745 level, the one that I mentioned this morning, if you remember. And this morning I said that if we get a pop above this, then yes, this increases the chances for a further move higher towards even the 1760 zone here. But in order to, let's say, be a little bit more comfortable with higher areas, I would like to see this daily candle staying today above this barrier, because as you can see here on Tuesday we reached that level, this 1745 zone. Yesterday we kind of flirted with it, but then drifted back down. Today we're breaking it. But can we stay above it? That's another question, because if it stays below this area, then maybe it will just prove us that this barrier is a little bit too difficult for the buyers at the moment, and maybe a bit of a setback here could be possible. However, as I mentioned before, that in order for me to, let's say, consider the downside here, I would like to see a drop below this 21-day EMA at least, and then yes, we could go for a bit of a larger correction to the downside. And the reason why I'm saying correction, because overall we're still trading above this upside support line, although tentative a little bit, but nevertheless an upside support line taken from the low of the 20th of May 2019, guys, so keep that in mind. But for now, as long as the price remains above the 1745 level, yes, there is still a good chance we could see this one pushing further north. Bitcoin, very quickly on that, and yeah, I mean, we saw this rebound. Everything is according to the plan still. This upside line here did provide good support, taken from the low, the 27th of January. This upside line is, but I would prefer to wait maybe for the daily candle to stay above the area, somewhere above this 57,212 territory right here, just to be maybe a little bit more on the safe side. At the same time, the rate would be placed and would stay above the 21-day EMA, and yep, more buyers could join in. But again, for now, long story short, basically, we are leaning a little bit more towards the upside here, but I really want to see how this daily candle is going to end up being here in relation to this 57,212 territory. AUD CHF jumping into a few pairs right now, so you can see that we have drifted lower. And previously, when I spoke about this pair, I said that we might see a bit of a corrective move here lower, especially if the rate falls below the 0.7144 territory and below this 21-day EMA. And this is exactly what happened. It drifted lower, tested one of my targets here, the 0.7088 zone. So yep, perfect hit. But not only that, it kind of overcame it and stayed below it. So this, of course, just kind of strengthens the idea of seeing maybe a possible test of this upside line. Well, let's wait and see. But for now, everything is kind of working in that favor. Everything is in favor of that idea. There we go. But nevertheless, guys, still, I mean, anything can happen here. So basically, be very careful, and probably for now, keep your eyes on some of the levels here. And for me, let's say to consider the upside again, I would like to see this pair pushing back above the 0.7144 territory right here, because at the same time the rate would be placed above the 21-day EMA. But given that it's currently even struggling with this 0.7088 zone, which previously acted as a good area of support, now it's acting as a resistance. That kind of shows that there is a chance for maybe a possible test of this upside line. And of course, keep your eyes on the in general the situation in the equity world, because if the risk off environment will strengthen in the short run, then yes, we could see a pullback a little bit here, a throwback on Australian dollar against the Swiss franc. USD JPY, so this one is drifting according to the plan. So Yep, I mean, if you watched my videos this week, then yep, this is what I was calling for. And what I said, that if this 109.85 territory will continue to provide resistance, if of course initially we fall below it, and then yes, it could open the door towards lower areas. And yesterday when we saw a bit of a retracement here to the upside, and I said that if this 109.85 level continues to provide resistance, then yes, another slide here towards the 109.23 territory. That was my main target initially. Could be possible, and we've managed to reach that, and we managed to overcome that as well. So now we're kind of hanging near the 109 level. Let's see if we can stay today below this area, below the 21-day EMA and below this 109.23 zone. If we can, then yes, maybe this will kind of work out nicely, because initially I called this week, I called this level right here, the highlighted territory, because maybe, just maybe I'm getting ahead of myself here a little bit, but maybe we could see something of a possible head and shoulders pattern here, with the neckline being around here. So basically a move lower here could be possible, then a rebound, maybe a move here somewhere back to this 21-day EMA, and then maybe another slide. But again, like I said, let's not kind of get ahead of ourselves. Let's go step by step on this one, and that will be a bit of a safer game, because we have been wrong. I have been wrong on this in the past. So, like I said, just to be a little bit more on the safe side, let's go step by step. If it works out, that's perfect. That's great. But for now, what I'm looking at here is the 109.23 zone. US dollar against the Russian ruble, and this is something that I've picked up recently. And if you remember, I said to keep an eye on Monday. I think this is when I was covering this one, because we were still below this highlighted area, this upper side of the little range here that the pair was stuck in. And what I said, that if we manage to clear this and push above the upper bound of the range, then yes, this could open the door towards higher levels, where my next target could be the 77.75 level, which we managed to perfectly reach here, or this 78.60 territory, approximately around here, marked by the inside swing lows here of October 29th and November 2nd of 2020. And now we can see that after reaching the 77.75, the pair corrected a little bit lower, however, remains above the upper side of the range here. So let's see if it continues to provide support. If it does, another push higher could be possible. Also, similarly to USD JPY, JPY is also drifting lower. Of course, yen buying is resumed, and of course the weaker pound here is kind of moving. This whole pair, I mean, this is the result which we're getting here: the weaker pound and the stronger yen. And yeah, everything's also according to the plan. I talked about this pair yesterday, and I said that my next target is the 150.79, a break of which could open the door towards a possible test of this upside support line taken from the low of the 21st of December, which we are just shy by a few pips from reaching this upside line. Then it will be very interesting if this upside line can provide support, and can it hold. If it cannot, then yes, my next target is the 148.53, but I'll be very careful near this area, and this is where I'll halt, and then I'll reevaluate everything again. But at the moment, yes, I'm aiming for this upside line. If it holds, a nice rebound here could be possible, but if it does rebound, I would prefer to see maybe a push and a daily candle staying then above the 21-day EMA in order to kind of, let's say, aim for higher levels. And finally, EURUSD. So this one is moving once again above the 1.1881 zone here. The idea that I mentioned this morning was that maybe we could see a bit of maybe a larger corrective move here to the downside. However, as you can see, that's not really happening right now. Instead, it's pushing above the 1.1881 zone. Either way, guys, I mean, this is what I still mentioned before, that in order to, let's say, get a little bit more comfortable with the upside, I would need to see a push above the 1.1881. I would like to see the daily candle staying above this area, of course, to be a little bit more comfortable with the upside. But at the moment, guys, we're kind of slowly pushing above this area. Let's see if we can, yeah, let's see if we can actually kind of let's stay above this area, stay above this 1.1881 zone. If you can, then yes, I'll aim for the 100-day EMA then, or this 1.1990 level. If we cannot, then this little idea that I've mentioned this morning with a little bit of a retracement here still could be possible, because if it drifts lower but let's say struggles to drop and stay below the 200-day EMA, yep, another push higher could be possible. However, if the 200-day EMA surrenders again and we see the rate falling below the 1.17, or should I say 1.18 territory right here, then yes, lower levels could be met. So guys, that was a quick overview of some of these instruments, some new ones, some of the instruments that I looked at this morning. So yeah, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time here, guys, with me. Thank you very much for that. And yeah, have a wonderful evening. If you want to join me tomorrow morning, as always, my traders espresso, 6 o'clock GMT time. For now, guys, see you later. Thank you very much, and bye-bye.